The global financial markets are experiencing a significant downturn. This is becoming a menace. Now, let's dive into what is happening. The global financial markets are experiencing a significant downturn as investors are increasingly seeking refuge in safe haven assets amid rising recession fear. People are actually afraid that recession is about to hit. So the sell-off has been exacerbated by disappointing economic indicators and shifting monetary policies from central banks, notably the Federal Reserve and the Bank of Japan. The catalyst of this recent market turmoil was the release of the lackluster U.S. job report, which raised concerns about the strength of the economy. Many investors are questioning whether the Federal Reserve made a mistake by keeping interest rates stable during its last meeting. The report has intensified fear in the U.S. economy, maybe heading toward, people are actually afraid that maybe the economy is heading towards a recession, and this has prompted the wave of selling across global stock market, not just the US, but Japan and everywhere. So in Asia, the situation has been particularly dire, with Japanese stock confirming a bear market. Japanese has already confirmed a bear market. The Nikkei 225 index suffered a staggering 12.4% decline, closing at 31,458 and then 42 cents. Its worst day since the infamous Black Monday in 1987. This drops of 4,451.28 points marks the largest point loss in the index's history, highlighting the severity of the current market condition. In Europe, the Stoxx 600 index fell 2.34%, with all sectors and major regional markets trading in negative territory. Technology stocks were hit hard, initially dropping by as much as 5% before recovering slightly to a declining 2.8%. Meanwhile, mining shares declined 3.65% and banking stocks were down by 3.22%. So these are numbers that are staggering. People are actually afraid. Now you might wonder, okay, what is the safe haven assets that we are talking about that people are rushing to? So as stock price continues to plummet, investors are flocking to safe haven assets. This is like the Swiss franc appreciated by 1.2% against the US dollars, reaching 0.847 points, its strongest position since January. So it's showing that this might be the safe haven. This might be where people should go to because it is stable right now. It's even increasing. So the US Treasury yields also fell, with a yield on the 10-year Treasury hitting one-year low of 0.709%. The 2-year Treasury yield was last seen at 3.731%, down approximately 14 basis points. Gold futures rose by 0.38%, trading at $2,479.20 per ounce rather. So as investors turn to precious metal, looking for stability in the face of the market volatility, we don't know when they are going to come back, and we don't know when this is going to reverse. But according to Market Insights, Ted Alexander, the chief investor officer at BLM Funds, commented on the ongoing market volatility, suggesting that while the current situation may seem alarming, it has been anticipated for some time. He noted everyone's been expecting it for a while. I mean, if you followed Robert Kiyosaki, he has been hammering the market the possibility of a recession. So according to him, he said that it's great for active managers. Those who are active, they can be able to, turn things around very quickly. So according to the same guy, which is Ted Alexander, the upheaval might encourage equity investors to return if stock price become more attractive from a value perspective. He advised against completely withdrawing from technology and growth sectors, stating stock markets aren't finished yet. Of course, you know how this is going. Sometimes when it dips like this, the bear market, whatever thing, people that are smart know how to cultivate, know how to take advantage of the market. I'm pulling a lot of stocks because eventually it's still going to rise. No matter what you think is happening, we have seen this happen over and over. No matter how it falls, you're still going to rise. And this is just for the normal stock, for tech stock and the rest of them. As you can see on the picture I have here, you can see for crypto is hitting hard. It's hitting crypto hard. Bitcoin, Ethereum, all the major stable coins, all of them are dropping. Of course, except for Tether and USDC, those ones seem to be a little bit stable. But for crypto, for Solana, Bitcoin, Ethereum, and the rest of them, they are all dipping. So those who have it now are beginning to shed their coins. But those who are smart enough, who understand the market cycle, we know that as they are shedding, they are picking it up. So if you want to buy, this is the time to start buying up. Of course, it will still drop, so you buy up and wait. As long as you are not in a haste to recoup your money, the market is going to reverberate, it's going to rebound, and you are going to make more than all those that are selling off right now. That is the latest on stock market. That's the latest on finance. Thank you.